right, we are going to start tonight. Tonight is June the 10th, Transformational Tuesday. I've got a pretty heavy lot of data. I don't want to get too lost in the data because I want to keep this somewhat high level. And I'm not normally a big data guy, but tonight just really required to get some data. So if someone can give me a thumbs up, you see my screen. And if anybody ever has any questions, pop them into the chat. And if I don't see them right away, I will follow up and make sure that I get you your answers. And I always love talking with people, connecting with people. So I am going to put my contact info in the chat at the beginning, and I'll put it in again at the end. That's my link tree where you can connect with me everywhere, and also a link to book a call. So tonight we're talking about fear, uncertainty, and real estate, how smart investors make bold moves, invest with confidence no matter what the headlines say. So again, this is an educational series. We are here to educate you. I am not your financial advisor. I'm not your lawyer. I'm not your accountant. And what I'm presenting here is what I believe to be true. But before making any investment decisions, you must always do your own due diligence. So a little bit about Massive Capital. I'm Trevor. I'm Vice President Investor Engagement with Massive Capital, and we are a vertically integrated real estate company. We're a developer of Class A retail and town centers, and we're an owner-operator of value-add multifamily. We do land development, building construction, and building operations. We are very Texas focused because we all live in Texas, and Texas is a great place to invest. We do have a couple of assets in Denver, North Carolina, and Atlanta, Georgia. And we have a partner, Realty One, who does most of our development work. They're on the retail and construction side. They have about 300 million in assets, and Massive Capital has about 210 million. So we do limited partners where they invest in our deals. We do triple net brokerage, land development, steel frame construction, and then we do have a masters, which is our mastermind. And if you're interested in about becoming an active real estate investor, we can certainly set up a call and talk about that. So I like to always start out, why do we invest in real estate? And so, cash, you get no cash flow, no leverage, no real assets, no tax advantages. Bonds, you get a little bit of cash flow, you get a little bit of tax advantages. Real estate, sorry, stocks, you get a little bit of cash flow, and you can buy on leverage, but of course you're not buying real assets. And other than the fact that many of the earnings could come as capital gains, there's no real tax advantages. But the reason we love real estate is you have cash flow, you have leverage. So anybody who's not read Rich Dad, Poor Dad needs to read that book where he talks all about the power of leverage in real estate. We are buying real assets, and real estate has some of the greatest tax advantages there are out there. There are lots of ways that you can get some very, very good tax advantages from real estate. So tonight we're just going to briefly go over what is a syndication. We're going to talk about fear, a little bit about the market distress. We're going to talk about the gap between rent and mortgages and the fact that you must keep your money moving. And then we're going to have some time for a little open discussion and Q&A. And of course, always my favorite topic is the power of investing in syndications. So what is a syndication? It's a group of investors who pool money to buy or develop real estate. Syndications are ways for investors to invest in larger properties that they can't afford on their own. Syndications are totally passive as a passive investor. How it works: sponsors, general partners, they're experienced real estate professionals who organize the syndication, secure the funding, and implement the business plan. So that's what we do with Massive Capital. Investors are limited partners, often referred to as LPs, and they fund the project. But most importantly for you to understand is you own a portion of the asset. So for example, when you invest in many of our syndications, our limited partners actually own 70% of the asset. Us as sponsors own 30% of the asset. So you get a real power. And because of that, you also have limited liability as a passive investor. So your only risk is your investment. And I want to make sure I'm clear. Real estate investing is not risk-free. There is some risk. It also allows you to invest in specific projects. So if you mentioned before when I told you some of the things we're involved in, you can pick and choose asset classes that you would like to invest in because again, you want to make sure that you're leveraging the power of a team that can bring certain real estate developments to you. And the most important thing is the returns are directly tied to the success of the projects. So for example, as I mentioned, many of our deals are 70-30 split, but we also offer what's called a 7% preferred payment. So what that means is our investors get paid first. And until you get a 7% return, and that accumulates if we're not able to pay it, we don't get paid anything as sponsors. Once you've met that threshold, then we share the profits. So again, if we earn a dollar, 70 cents gets split up to the investor and 30 cents gets split up to us as passive or as the sponsors. So a little bit about syndications. We offer, first of all, we start out as a 506B. And for a 506B, we must have a pre-existing relationship and you need to be considered a sophisticated investor. So first of all, pre-existing relationship means if I don't know you or you don't know anyone on our team, we need to get to know each other. We must have a pre-existing established relationship and then you must be considered a sophisticated investor. Well, how do you become a sophisticated investor? Well, other than booking a call and getting some questions, you come to our Tuesday webinars, you come to our different events. We offer lots of education. We have a lot on our YouTube channel where you can learn. Also want to make sure that you understand as a 506B, we only have 35 spots for non-accredited investors. And when you get on our waiting list and you say, hey, I'd like to get on the waiting list, it means you get the first access to these 35 spots. And again, I already mentioned, I can't solicit it. So if I don't know you and you don't know me, I cannot send you this opportunity to invest. Then we always switch our deals to a 506C offering. And a 506C offering is only available to accredited investors. To be an accredited investor, you need $1 million in assets, excluding your home, an income of 200 single or 300 married. And then for me, there's no restrictions on soliciting, so I can market it everywhere. So again, if we connect on LinkedIn or Facebook, I can't put that deal on until it's a 506C for accredited investors. So I want to make sure that you understand there is no difference between the 506C and the 506, pardon me, B and the 506C offering. It's only who can invest and can I market it. So for many, many years, it was only the 506C. Only accredited investors were investing in these, what we're going to call institutional real estate assets. And so this has been a huge thing for us to be able to offer this to the general public to start investing. So again, my most favorite slide here, my good buddy Warren Buffett, if you don't find a way to make money while you sleep, you will work until you die. So again, a passive investment is totally passive. You invest in our property, we'll go buy a property, we'll operate it, we'll manage it. And as I mentioned previously already, we will share a portion of the proceeds over to you as a passive investor. So there's one thing that didn't show up on the chart. You know, we talk about the power of leverage and different things. I want to talk about the power of compounding your money. And part of tonight's lesson is all about, yeah, you know, there's some stuff happening. There's some people that are definitely struggling on some of their deals and do things. But at the end of the day, if you stop letting your money move, if you stop making money while you're asleep, especially in a high inflation market like we are, you're actually going backwards. So here, again, our goal is to double your money every 5 years. I've also assumed you have no tax issues. So again, you may have to pay taxes. We may have to all pay taxes on some of these. There are lots of ways, again, with the bonus depreciation, some other things where you can delay or avoid taxes or through your retirement funds. But what I'm really trying to show here is you make an initial investment of 100 and in 5 years, it gets doubled to 200. Then you invest the two and in 5 years, it becomes 4. You invest the 4, in 5 years, it becomes 8. You invest the 8, and in 5 years, it becomes 1.6. 1.6 becomes 3.2. Again, some pretty hefty assumptions here. You have to double your money every 5 years. You haven't had any tax consequences where you've had to pay taxes. So even if you end up and you're making a little bit less because you've had a taxable events, it's still significant. This is the power. So this is you putting $100,000 to work with no new investment. This is just from your single investment of $100,000 and letting it continue to roll. So again, today we're talking about stress in the marketplace and different things. Yes, there is stress. Yes, there are some folks. But again, at the end of the day, if you just leave this $100,000 sit in the bank and say, well, I'm going to wait a few years, you are going to stop this trajectory of your money growing. And of course, we hope that you would invest more than once, right? So this is just investing and letting a single investment grow. You want to make sure that you let a lot of investments grow. So for those of you that don't know me, I've been involved in 33 syndications, 20 as an LP and 13 as a GP. 10 of those are with massive capital. So the most important thing is that your money is always growing. Now, a lot of people also say, well, I want to start investing and live off of my earnings. I understand that. You still have to eat, you still have to do different things. But again, if you put in 100, you turn it to 2, and you live off 100, it's only 20 a year, so you're not living great, you'll have 1 again. And at the end of 25 years, if you keep doing that, you'll only have enough $200,000. So again, real estate passive investing is not a get rich quick, it's a get richer slow. And so again, slow 25 years, if I'd have started this when I was 25 years old, which I didn't, I wish I had, my life would be a lot different. So again, there are 2 ways that you can do real estate investing. One is actively passive. And that sounds, well, why would you say it's actively passive? And it's active because you need to start learning. You need to start meeting sponsors. You need to start getting educated. You need to start learning how to analyze deals, to look at deals. And so that's one of the things that we do. We help you to be able to invest with confidence through our training. And then if you're interested in being actively active, we do have programs for people. We just closed a deal with one of our students, super exciting. We have an opportunity for you to do that. If you are interested to learn more about actively active and you have nothing to do tonight, after this call, I'm going to find, let me just find it here. You can scan that QR code. Oh, I'm going to put it right here. And I'm going to put it in the chat. So at 7 o'clock after this, one of my mentors does a presentation tonight after this class. You can join up and they will talk about actively active. Or again, just book a call with me and I'd be more than happy to send you some information. So fear. Fear has 2 meanings. Fear, forget everything and run, or face everything and rise. The choice is yours. How many people, and I know it's hard because a lot of you don't have your cameras on, would think we're in a climate where there's a lot of people afraid. There are a lot of people who are nervous. There are a lot of people who are afraid. There are a lot of people who are unsure. And there are some very valid reasons why you may. And I'm going to go through some of them. And again, these slides are very, very intense, right? There's a lot of wording. I'm not going to read them all. Okay, so understanding the fear, right? Fear of failure. How many people don't do something thinking, I'm going to fail. I'm not going to meet my own expectations, so therefore I'm going to do nothing. Overwhelmed. It's very overwhelming. You're looking at these deals. I remember the first time I made a passive investment, it was super overwhelming. I was terrified. And do I know everything still after 33 investments? I do not. I've been learning a lot, but you want to make sure. Perfectionism. A lot of people think, well, until I figure everything out and I have everything in a row, I'm going to do nothing. Again, that's what I did for the first 58 years of my life. I was always interested in real estate. I always wanted to start investing, but I was all of these things here. The self-doubt. How can I do this? Who do I trust? What do I do? There's social anxiety. What are people going to think of me? You know, and again, think of this. It's a little bit crazy. If you invest in the stock market, nobody thinks you're crazy because everybody's investing in the stock market, right? It's just kind of what we do. But my goal here is to switch people to say, no, what we need to just do is invest in real estate. And again, you're buying real assets. There's a lot of things in there. And then of course there's lack of self. If you just feel I can't get this done, I can't do it, I'm not smart enough to make the right decision, so I'm going to make no decision. And again, if you make no decision, you will not be making money while you work, while you sleep, and you're going to work until you die. Again, I kept going around the Monopoly board. I knew as a kid, the people that owned all the real estate won the game. They were the ones that were successful. But somehow in life, I chose to let my fear get in my way. So again, quoting my favorite guy here, be fearful when others are greedy, and be greedy when others are fearful. So again, people are fearful right now. And there are some reasons to be fearful, but smart people like Warren Buffett, they understand that this is the time to buy. Very interestingly enough, I just turned 65, and someone sent me a text, one of my mentors, that asking me, did I know that Warren Buffett created 90% of his net worth after the age of 65? How did he do that? He always keeps his money moving. He's always investing. He's always ready to invest. He's always looking for opportunities to be able to do it. So fear, uncertainty, real estate, we want to make sure that we're making bold moves. So again, there's a lot of words in my presentation. I'm not going to read them all. You can go back and listen to this again if you want. But our goal is to sort of try to give you an overview of some of the things that are happening. We're going to examine some of the indicators of distress. Yes, there are properties struggling. I'm not going to sit here and tell you that properties are not struggling. And then we understand if you know the market dynamics, then we can empower savvy investors to make bold moves. We spend at Massive Capital all day, every day, looking for opportunities. That's all Massive Capital does, right? So we're looking for opportunities for deals to be able to happen. And again, at the end of the day, when we're finding a deal, we're looking for a deal that our investors get paid first and we get paid second. So again, you really need to understand the market. We do a call every Monday where we do market updates. So as of early 25, 40% of all multifamily properties are reported to be in distress or in risk of foreclosures. And this is an alarming statistic to go. But again, I want you to see the other side of the coin. This has happened. We cannot fix what happened. We hope that we made smart decisions, that it's not happening to us, but we cannot fix this. We cannot do it, but it will create a massive buying opportunity. You know, there are periods of time where there's huge wealth creation, and there's a lot of wealth creation going to happen because anybody who bought properties kind of pre-COVID during there, they overpaid right now based on what today's market is. But we believe they'll definitely survive. There's a lot of properties that are going to be fine, but it is also going to be one of the biggest buying opportunities. And what you don't want to do is find yourself sitting on the sideline wondering, okay, what should I do? Should I go? Should I not go? Again, you want to make sure that you are ready to go. You're getting educated and you're surrounding yourself with people that you believe are effectively watching the market. So understanding, right? So distress in multifamilies, various ways, right? Risk of foreclosure, low occupancy, some financial instability. Properties are facing challenges with substantial price reductions, making them attractive to potential buyers. So again, I want to go back. One of our last deals that we just closed in San Antonio, it originally came on the market at $21 million. We actually made an offer at 16 million because we could understand that it just wasn't worth there. Somebody else bought it for, I think it was for just under 20. They couldn't close on it. Came back on the market at 19 million. Property actually improved a little bit, so we offered 16.4. Ultimately, I'm going to make a long story short. After about 7 months, we bought it for $16.9 million. And again, that's what makes it a stable investment, right? We waited to make sure that we bought it at the right price. So again, you need to understand these types of stresses and how you can maximize them, how you can use that opportunity. Again, we just have one spot left on it, actually, have a property in Sealy, Texas. Same thing. It went under contract. They couldn't close, came back on the market, and we were able to buy it at a significant discount because the seller still wanted to sell. So there's a maturity wall, okay? Approximately 625 billion. That's a pretty big number. And commercial real estate loans are set to mature in 2025. And we believe this is going to definitely add some stress to the marketplace. Now, I want to make sure that you understand there are trillions of dollars in loans. So again, this sounds like a huge number. There's a lot of things in loan. And I do have the sources that we can click through. So at some point, if you actually want to get where I got this data, we can certainly share that with you. So opportunities in distress, despite the challenges in market distress, it can lead to discounted property prices, creating valuable opportunities for savvy investors. So again, I know I keep sounding like a broken record. We're at a stage where, yes, there is some distress. Yes, things happen. So do you sit there and wait, or do you act and take advantage of it, right? Again, I'm going to go back to my good friend Warren Buffett. He says, nobody knows you're swimming naked till the tide goes out. The tide went out. There's a couple of folks swimming naked, but it's a great buying opportunity because they're now in a situation where they have to. And again, with groups like Massive Capital, we look at more than 100 deals a month in all different types of asset classes. We analyze them, we go through, and again, we want to be ready to act on these opportunities. So I want to go backwards. Why do we talk all about, why did I tell you what a syndication is and all the different things? And if you're not an accredited investor, we need a relationship. Because when that window happens, when we have that opportunity, if you're still stuck back in the fear, if you're still stuck back in the analysis paralysis, and I know every single person on this call has been there or is there and just can't get out of it, right? You just can't reach the point where you think, okay, listen, I've got to make a move. I've got to get my money compounding. I've got to get my money growing. I can't keep it on the sideline. Again, if you pulled your money out and it's sitting there at higher inflation, it is on the sideline. It is not moving. Again, you are not going to get rich slow. You're going to get poorer slow. So again, investment strategies for distressed properties, right? So again, there are some significant value add opportunities for properties that can enhance their value and increasing potential returns. I'm going to tell you that there are a lot of properties that are still performing well. They just have the wrong debt structure, or they have exhausted all of their resources. And it's very challenging because, again, I'm sure you've heard that several deals have had capital calls, and it's very challenging to know, do I put more money in? Do I not put more money in? And again, I'm not here to tell you whether you should or shouldn't, because I don't think there's one answer. It's all very deal specific. I've had a couple of my passive investments where I've been able to put some money in, and I really believe that it's a good time to do it. Because again, all the volatility in the market has made it opportunity. So for example, I have an apartment that was on a bridge loan at an 80% loan to value. And I know that's a lot of information if you don't understand loan to value, but that's what normally happened. Well, what happened was they improved the property. The property's actually worth $10 million more. It's a $40 million, and it went up to $50 million in value. But in today's lending environment, and they wanted to get a loan that had no prepayment penalties. So again, I'm talking a lot of big things here. Prepayment penalties can be very challenging if you've got a higher interest rate in the mid sixes and you want to be able to refinance, hoping it comes down to the mid fives or even low fives. And they ended up with a loan that was 58% loan to value. So again, they had an 80% loan, and that went down to a 58% loan to value. So the property was still growing in value. The occupancy is still growing. that all the things are happening or growing. It's just the market conditions changed. That property would be shown as distressed only because it was coming at an expiring rate. Remember, I talked about all these loans that are coming and expiring. They were able to refinance, they were able to recapitalize. And again, those who've been able to survive, I think, are going to come out the end. It's a very nice property in a very strong market. And I think that people made a wise decision to be able to stay into that deal and to do.
And now, here's someone you want to hear from, our sponsor.
For over 15 years, Skyline Title has been a trusted name in Texas real estate. From first-time homebuyers to seasoned investors, our team ensures a smooth, reliable closing experience every time. Backed by a decade of partnerships and proven success, we take pride in protecting your biggest investment, your home. Visit SkylineHTX.com to learn more.
It was basically what's called a cash in refi versus a cash out. Had to put money in because you got lower loan proceeds. So again, in the conclusion, right, we've explored the key indicators of distress in multifamily real estate, opportunities that arise from these challenges. Remember, a distressed market, strategic investors can uncover the hidden gems that they've overlooked. And by staying informed and proactive, you can turn fear and uncertainty into success. So I do want to stop for 1 second and I'll go back and share. I just want to see from the audience if anybody wants to unmute themselves, wants to put a comment in the chat, because what I don't want to do is just me here continually talking, because I want to be able to give you an opportunity midstream before I go to the next portion of the investment, the webinar. Lisa?
Couple things. The figures that you were giving us for the distressed properties and the amount, is that national or is that?
That's national. That's national.
Okay.
And they're scary numbers, but they're not scary numbers if you look at the number of loans that are out there.
Mm-hmm. And so are we seeing a higher, I think I heard the capital call, is that what you're calling it? Where
So a capital call can definitely happen. So a capital call is where they either ran out of cash or they have some sort of an event and they ask investors to do what's called a capital call, put more money into the deal. So again, as an investor, all of this will be spelled out in your private placement memorandum and in your operating agreement. You do not have to do a capital call, but if you don't, you will be diluted, and or a pref equity piece might come above you. And again, you need to look at that deal for deal. But I want to make sure that we're realistic here, right? There is definitely stress, but I don't want us to be frozen by the stress and say, well, all of these reasons I've got to stay on the sideline now. That's the more important fact to learn, right? Because we can't change what is. We can only change where we're going. And again, what I really wanted to stress is that there is about one of the biggest buying opportunities coming.
Got it. Thank you.
Yeah, thank you. Any other questions? Any comments? Either I'm doing such a great job or you all fell asleep on me. I know it's hard when there's a lot of you are driving or cooking your dinners. Okay.
Good stuff. Good stuff.
Oh, awesome. Well, thank you for that. All right, I'm going to go back and share some more here because I've got some more things to go over, and we'll open it up again at the end for some Q&A. So again, who's heard this quote before? When there's blood in the streets, even if it's your blood, you got to keep buying real estate. Okay, even if it's your own blood, you need to keep buying real estate. So Baron Rothschild said that a long time ago. He doesn't look very happy, though, I got to tell you. It's a pretty old picture of him. So this is something I want to talk about that is good news for those of us that are in the multifamily. I couldn't find anything that did more than 2022, but I want you to pay attention to this graph. So this red line is rents. So you can see from 1970, right? Rents were way down here and they went up to here. That's a pretty big increase, right? And it's a pretty linear, steady increase. But what I want to show you here is This is the delta of home ownership mortgage based on what you would pay, right? So again, you look here, there's quite a big delta there. There's a big housing bubble there, right? So your rent was here and your house was there. But what I want you to notice is on average, people are paying $1,800 in rent, and on average, people are paying $2,600 in a mortgage payment. Do you know what this means? This means that most of America will never be able to buy a house. They will be lifelong renters. The delta has never been greater. And I don't see this correcting. And this takes into account lots of different things, right? So again, this is a period where a lot of boomers were buying. There was very high interest rates. This is the housing bubble. Housing prices started to spike here. And if you look at this delta, it is incredible. So what does this say to you? This says to me that rental market is stronger than ever. So again, I spent a lot of time talking about distress. I spent a lot of time talking about things, but there are people that are living in apartments that will never, ever be able to get out of apartments, because even if interest rates come down, because this is the combination of home value and interest rates. So even if they come down a little bit, there has never been a bigger delta. And I wish I had 23 and 24. I scoured, I couldn't find a chart that showed that. But I really want to make sure that you understand this, that the rental market is stronger than it's ever been before, because the people have been priced out of home ownership. So I already gave you the opportunity to share your challenges. We'll go back to it. So one of the things I want to make sure that I talk about when you are looking at real estate investing, you want to make sure that you've balanced risk, reward, time, and asset class. So for example, if you still think there's a couple of more years of stress, you may want to look for investments that are a little shorter period in time, so that you can keep your money moving. So for example, we've had some retail opportunities that are 3 years. We do have some multifamily that's 5 years. And again, you want to look at various asset classes. Again, there are a lot of asset classes that are starting to boom. One day I'm going to do a whole webinar on senior assisted living. There is this senior tsunami. I know, because I'm part of that generation. I'm not quite assisted living yet, but America is getting older and older and older. And that's going to be a huge future asset class. And it's one that we've started really working really hard with on Massive Capital. One of the folks within our group just bought some assisted living homes. And these are homes with up to 16 beds. They're homes in neighborhoods. They're smaller. They're a little more intimate than where I used to go visit my Nana and think, I hope I never end up there. But it's definitely a huge market. So again, you want to make sure that you're looking at different things. Again, sometimes the risk might be a little bit more on development than it would be buying an existing triple net, because on existing triple net, the tenants are paying most of the costs. So you want to make sure that you're balancing these things all out, and that you're meeting with people, talking with people that really are following the market. And again, I am not the expert. Shirar was here for a little while, but then I think he popped off. He's driving from Dallas. He's really into this, so he might pop back on. We'll see. I didn't see him there. But this, all he does all day long is analyze deals, analyze situations, watch the markets. Sanjay, who's part of our team, comes from a banking background. So again, having people on your team that are looking at all of these things. So if you are in the Dallas-Fort Worth area, I'm going to invite you to come to an educational property tour. So one of the things that Massive Capital has really started trying to be able to do is to do a little more education on an actual real life experience. It's one thing to spend an hour listening to me babble on about different things, but this is an opportunity. This is an apartment complex we owned, and we do own, had it for a couple of years now. And we've actually been doing some very interesting things. So we were struggling to rent our 3 bedrooms, 2 baths. So we actually renovated them, and we took a 3-bedroom, 2-bath and turned it into two-bedroom, 1-baths. Because we had a lot of demand in the marketplace for 2-bedroom, 1-baths. And again, understanding your demand, and it made sense for us to be able to switch it, because at the end of the day, with the 2-bedroom, 1-baths twice was giving us substantially more rent than the 3-bedroom, 2-bath that was not renting. So again, if you're in the Dallas area, and if you're not, just keep connected with us, keep connected with me. We do this in different cities. I believe next month we're going to be in New Braunfels looking at an industrial development project that we're building there. Hopefully, I think we're coming out of the ground. We were going to do the tour a couple of months ago. Thank goodness we didn't, because it was pouring buckets rain and we were all going to be standing in a muddy field. So I believe now that they're coming out of the ground. So instead, we're going to stand in 100-degree heat out in the middle of a dirt field. But anyways, now if you are a lady on this call and you have not attended our ladies, this is Jasmine. Jasmine is who I work with at Massive Capital on a regular basis every other Tuesday. So the Tuesdays you don't get me, you can join in if you're a lady, and you can connect with Jasmine. She does an amazing job, and it's a real support group. I know everybody that I've recommended attends, says this is amazing, this is super fantastic. I'm glad I joined. And so again, if you would like to join, there's the link. It's 6 o'clock again, same, just get on a link. And then for myself, my goal is to help 100,000 people reach financial independence through real estate investing. So again, I've dedicated a lot of time and a lot of energy. Oh, look at it, my screen here is all messed up. Oh, sorry, now I ended the slide, getting fussed about my name. So if again, I'm going to put it in the chat. If we've not connected, or if we haven't connected in a while, book a Zoom call with me. I'd love to be able to talk to you one-on-one. I'd love to be able to answer your questions. I'd love to be able, if you're looking to, even when I mentioned before too about getting on my waiting list for a 506B deal, that doesn't mean you have to invest. It just means you're going to see the opportunities. If you don't have the access, then you're not going to see the opportunities. Again, I can't send you a deal until it's a 506C if we don't have this established relationship. So I'm going to stop sharing again, but then we can go back. I've got lots more I can talk about at some point, depending on the questions. Any other questions? Hopefully you guys learned. So I talked too fast again today, so I'm like 10 minutes early.
Hello, Trevor.
Yes, sir.
How long do you typically wait between 506B and 506C?
Yeah, so anywhere from 3 to 5 weeks is pretty normal. So we'll normally put it up, and again, we'll know it's coming. So if you're on, hey, I'd like to invest list, we'll tell you this is coming. We'll give you a little bit of information, but we may not have all the legal documents ready and have different things, but we'll have at least enough for a sneak peek and a conversation. And then we launch the deal, we do a webinar. On average, it's been about 5 weeks. And again, it just depends, because we normally have about 3 months to close. And we want to make sure, because we have to have a little bit of gap between 506B and C. So we want to make sure that everybody who wants to get in gets in. And so it's super important for just to make sure. But again, once it switches, you can't get in if you're not accredited. It's good to see you, sir. Thanks for joining.
Thank you.
Yeah, and again, I recommend that you, even if you're not accredited, and I've got a webinar for accredited investors, it's okay. You can come and learn. You just can't invest, right? There's not an opportunity for you to be able to invest in the opportunity if you don't, if you've missed that window. I want you to be able to come and learn. Now, I did mention at one point too, I do have one opportunity that is available. I thought I put the slide in, but then I realized I didn't. So there is one opportunity. I have one spot left on an apartment complex called Vale. It's in Sealy, Texas. It's 60 units. and it's actually a series of 15 fourplexes. It's a really interesting opportunity. I have one spot left in that. I just we had two, but I got one filled today, and but it's an interesting. It's a little more than double your money in 5 years. It's a slightly different structure where the way we've sort of set up the deal. I'll quickly share it with you here real quick. Just give me a second. The way we've structured the deal is a little bit different. That sometimes what happens is there's the pref payment, and then there's that some of the proceeds are split on the project. This particular one, the way they've done their cash flow is that it is not, you're going to get your 7% pref, but you're not going to get the upside until the property sells. So I'll just quickly share what I mean. And again, I'm just sort of telling you this so you get an idea of different types of investments. So let me just quickly, I'm just going to start sharing real quick. And again, this is only for accredited investors. I just want to make sure. So you can see again, this is the inside of a renovated unit. Very nice units. And again, it's a series of fourplexes. So if you look at the properties here, this is a fourplex. Each apartment unit has 2 parking spaces right in front. So it's not like an apartment complex where there's no parking. You got to park far away from your units. Solid brick buildings, nice sloped roofs, built in 1982. Some things that are interesting. So the current owner owned it for quite a while. He actually turned one of the units into a leasing office, which makes no sense when you have 60 offices. And he had a demo unit, like a show unit. So in theory, he only had 58 apartments for rent. And even with that, it's just an amazing thing. So we ended up buying it for 5.9. We're raising about $2.4 million. This is where it is. So for those of you that aren't in Texas, this is the edge of Houston. So here's Katy, and here's Sealy, Texas. It's right off I-10, which is a main category. And then these are a lot of the value add opportunities. But what I really just wanted to show you here was how this particular deal works. So if you were to invest $100,000, you're going to make about $7,000 a year in the 5 years of $35,000. And then you're going to get your portion of the sale at the end of year 5. We're going to sell the property, and that works out to about a 2.3 multiple of your money. And again, there is this 7% preferred. So you're paid this before partners are making any money. So again, I just wanted to share that real quick. That is an opportunity that we do have. I went and saw the apartment complex, a really nice apartment complex. All right. Any other questions? So just to make sure you guys know how much of a fan I am of the ladies group, I'm going to share here with you guys. This is a picture of me at their event wearing a wig. And if you're in the Austin area, the ladies do have a meetup this Saturday. So if you're in Austin, I know I sent it to you, Lisa. Anyone else in the Austin area? Our ladies are having an in-person event. I'll put it in the chat just in case somebody's in Austin and they want to come to Austin and join the ladies event. Again, it's such an amazing group. And then I did already put in the chat if you want to come on the property tour in Fort Worth. Excellent. Somebody's got to have a question. No questions? Did somebody learn something? Hopefully somebody learned something.
Can you speak a minute about this master group? I forgot what you called it.
Yeah, so it's Massive Masters. We have a group with Massive Masters, and it is basically folks that want to become active real estate investors and sponsors. can join the Massive Masters. So it's a separate mastermind with a charge for it. And it's people that are looking to become active investors. So for example, I do see Tim, who's on the call. I don't know if he can unmute. He's part of the group. I can't recognize anybody else's name that's part of the group right now, but I can also send you an email that will talk a little bit more about the program. Happy to do that, Rob. Hey, Tim.
Hi, this is Tim. Yeah, I'm working in the program, by the way. Yeah, if you guys have any questions, you can connect with me.
Yeah. Tim's a great, we got to spend some time. We were suffering in Cancun, Mexico together, enjoying a lot of time together. Although I do have a funny story about Cancun. They were playing beach volleyball and everybody kept saying, Trevor, you need to play, you need to play. And I said, no, I'm too old, I'm not playing. And the next morning, there were a couple of guys hobbling to the meetings in the morning with twisted ankles and knees. And so it kind of proved my point. Although Tim didn't, he was fit and active.
I just played 5 minutes, so I was smart enough not to, butcher myself.
Well, excellent. So if no one has any more questions, and again, Raul, let me just put this link in the chat again. If you want to, you'll probably go into Shanoa's call though, aren't you, at 7? Okay, I'll get you the information. Yeah, 7:15. So I'll get you the information, or it might be on Thursday again. Awesome. Well, again, if you learned something, if you enjoyed yourself, please come back in 2 weeks with a friend. My goal is to build this up to about 100 folks joining every other week. And we did good this week. We hit up 20, 24. Last week we hit 33. So maybe it was the topic. I don't know.
I wonder if this most of the attendees here are from Big Dog or outside?
Most of them are outside.
Okay.
Yeah, and Big Dog is another real estate group that I'm part of as well, and so is Tim. Always got to be learning, getting with the right people at the right time. Awesome. Well, everybody, I really appreciate you coming. Again, I'll see you in 2 weeks with a friend. Thank you all.
Okay,
Good night.
thank you, Trevor.
Thank you.
Thank you.